Hi, this is Ken Winans, President and Chief Investment Officer of Winans Investments. And as we go through these historically significant times, managers have to stand out in many different ways. First off, history does repeat itself. Many people have been caught flat-footed by what's happened here recently with the play of the 1970s, the war in Ukraine, and all these things. The interesting part is that financial history should still be a driver in how you manage money. In our case, we are different from our competitors because we do not believe in a buy and hold strategy. We do not believe in just sitting by and taking big body blows in your portfolios. Every single client in our SMA space allows us to have up to 50% cash build up in their portfolios, whether it is selling or letting bond interest build up. Number two, we do implement the use of hedges, whether they are inverse ETFs or other possible strategies, to also dampen the volatility in the portfolios. It's one of the reasons that we have a track record that is 5-star ranked by Morningstar in many of our categories. The other thing that's very important to keep in mind is that we're willing to look in other areas that a lot of equity managers wouldn't look at. Case in point, commodity ETFs. A lot of people did not understand them. They have no idea what to do with them. We as technicians, I'm a chartered market technician, we know how to do the commodity space well and to integrate it into our portfolios, which, by the way, includes not just our equity portfolios, but also our blended strategies. So with that being said, we certainly find that our clients like our strategies as a core manager. We actually end up managing the bulk of our clients' money with tail areas going into special scenarios, but again, clients like having one manager who makes sure they don't have too much in the way of overlap in equity exposure, either by company or by industry. So anyway, please give Winans Investments a try. We think you'll be very happy with it. Thank you.
Hello, my name is Stephanie Larson, and I am the Managing Director and Senior Portfolio Manager here at Winans Investments. I want to take a moment just to talk about our bond strategy, what sets us apart, what makes us different. Now, we build custom portfolios for all of our clients, and we specialize in low duration, high yielding bond portfolios. Now, we do so by buying and investing in investment grade, high yield corporate bonds. And now that space has also been complemented with preferred stocks. Now, this isn't always the most sexy space. It's not equity or fund or alternatives, but bonds are very important. And what's happened right now is that 2022 has become an unprecedented, historic buying opportunity in the bond space. The only time that we've had two worst back-to-back quarters in history was the Great Depression and the 1980s bond crash. This has become a huge opportunity to take advantage of. Now, it seems kind of counterintuitive to jump into the market when you've seen the prices go down so much, but as long as you trust in the fundamentals and the companies that you're buying, bonds are still a good space to be in. Having a laddered approach, having bonds constantly mature, it gives you the opportunity to take advantage of these type of markets. These are the portfolios that we build for our clients. Now, because the Fed has raised rates, it has spooked the market. Prices have gone down quite a bit. It's baking into the prices these opportunities for higher yielding bonds in the future. The problem is those bonds don't exist. I can't buy an 8 or a 9% bond out there in the market. They're not there. So this dislocation, what has happened with the prices going down, this is your buy window. When a window like this opens up, you have to take advantage of it. They don't happen often. We saw a little bit in 2020 with the COVID crash, the flash crash of March. We've seen one now, but every few years you might get an opportunity. This is that one. So what are we seeing? Well, very good high quality bonds like Dish Network, for example. Just last week, I bought Dish Network for all of our clients. That bond pays just under 7% and it matures in 7 years. Well, the yield to maturity, because the bond is trading in the 70s, is in the high double digits. So I buy that bond, I hold that for our clients, and we're gonna hold that to the end, and they're gonna get nearly 18% or more on the yield to maturity. So those type of opportunities exist in the market. Bonds are trading in the 70s, the 80s, and the 90s, and you need to take advantage of them when that happens, because unlike equities, bond prices V. They V, and they V really hard, and they will lead the equities. The bond prices will start to recover before the equity market does. So when you see this opportunity, you need to take advantage of it. Now is the time that you have money on the sideline. You want to put that money to work. These windows don't open often, and when they do, you want to take advantage of it. If you want to learn more about this, Ken just wrote a great Forbes article. It's actually posted on our website, winansinvestments.com, and you can learn more about this strategy and what we're doing to take advantage of it.